We were promised that artificial intelligence would finally civilize the wild world of crypto. The dream was simple. Algorithms would bring order to chaos, making trading smarter, faster, and safer for everyone. It turns out, that wasn't the whole story. Instead of creating a perfect, orderly market, AI has unleashed a new kind of digital Wild West, one that is more secretive, sophisticated, and unpredictable than ever before. This is the story of how self-learning algorithms became the silent puppet masters of the crypto market, rewriting the rules for every trader. And in this new world, you're either in on the secret, or you're the one being left behind. Welcome to Generational Wealth, your pathway from knowledge to legacy. For years, the vision was straightforward. Use AI to solve the crypto market's most fundamental flaws. Human emotion. AI could trade without it. Market speed. AI could operate in milliseconds, far faster than any person. The 24/7 chaos? AI could automate it all. And for a time, it seemed to be working. AI-powered trading bots from platforms like 3 and Crypto Hopper gave everyday traders access to strategies once reserved for the Wall Street elite. These bots could execute complex orders around the clock, running strategies like grid trading and dollar-cost averaging automatically. The goal was to level the playing field, with AI analyzing massive datasets, from price history and order books to social media sentiment. It felt like we were entering an age of truly data-driven trading. AI was supposed to be the great equalizer, a tool that would bring stability and make profits accessible to everyone. But that dream was hiding a much more complicated reality. The problem is, these AI systems didn't just get good at following our instructions. They started learning on their own. The most advanced systems, often called AI agents, use reinforcement learning to adapt their strategies based on live market feedback. They don't just follow a script, they learn from every win and loss, constantly evolving their own methods to maximize profit. This has created a strange and chaotic new landscape. Instead of one person trading against another, you now have thousands of autonomous AI agents competing and sometimes even appearing to collude with one another. This leads to the classic black box problem. The AI discovers a profitable strategy, but its decision-making process is so complex that even its creators can't fully explain it. This unpredictability has given rise to a new class of digital predators. While there's no evidence of fully autonomous AIs launching tokens, we've seen how AI tools can be used to help create and market new meme coins at lightning speed. These AI-assisted tokens can materialize seemingly out of nowhere, propelled by bot-driven social media hype that catches human traders completely off guard. On the other end of the spectrum, traders have woken up to find their portfolios wiped out overnight because a bot misinterpreted market data or was caught in an algorithmic flash crash. So if you can't out-trade the machines, what are the new rules for survival? The first rule is accepting that you're no longer just trading against other people. You're operating in an ecosystem increasingly dominated by algorithms. These bots are now a massive source of the market's liquidity. They are the market makers, the arbitrageurs, and the high-frequency traders that define prices from one moment to the next. While this can create a more efficient market, it also leads to crowded trades where thousands of bots pile into the exact same strategy, erasing the potential profit for anyone who's late to the party. Because of this, the focus is shifting. Instead of trying to beat the bots, smart traders are now trying to understand their behavior. They are no longer just analyzing charts. They are analyzing algorithmic patterns. They search for the digital footprints of bot activity, trying to ride the waves of automated trading instead of getting crushed by them. The edge isn't about being the fastest anymore. It's about being the smartest at figuring out what the AI will do next. If this breakdown is helping you make sense of the market, do us a favor and hit that like button and subscribe. We're committed to uncovering the hidden forces that are shaping the future of crypto. And for an even deeper dive, join our insiders group on our website at generationalwealth.biz. This new Wild West isn't just chaotic, it's filled with new kinds of danger. AI-driven pump-and-dump schemes are becoming more sophisticated, using bot networks to create the illusion of genuine demand for worthless tokens. Wash trading, where a bot buys and sells an asset to itself to fake trading volume, is rampant and incredibly difficult for regulators to spot. This has authorities scrambling. With different rules emerging in the US, UK, and EU, we're in a regulatory minefield with no clear answer on who is responsible when an autonomous AI manipulates a market. The promise of high returns from proprietary AI systems has also become a common lure for sophisticated new scams targeting eager investors. Looking further down the road, things could get even more extreme. On the distant horizon, quantum computing holds the theoretical promise of supercharging AI's processing power, which could make today's high-frequency trading look like it's moving in slow motion. And decentralized AI, built on the blockchain itself, could one day create fully autonomous market players that are still experimental, but might operate with unprecedented independence. We thought AI would bring order, but instead, it has unleashed a new, more complex, and more sophisticated form of chaos. It hasn't tamed the Wild West. It has just armed everyone with faster, smarter tools. The markets are no longer driven just by human fear and greed, but by the cold, calculating, and often baffling logic of machines. Surviving in this new era doesn't mean you have to own a bot. It means you have to understand that they are now a dominant force in the market. The rules have been rewritten, and the only way to stay in the game is to learn them. So, here's the big question. Do you trust AI with your trades? Let us know what you think in the comments below. For our up-to-the-minute insights, join our insiders group at generationalwealth.biz. Quick disclaimer. I'm not a licensed financial advisor. This is for educational purposes only. Crypto is volatile. Never invest more than you can afford to lose. Do your own research. Thank you for watching. We appreciate your support. See you on the next one.